Hi, this is Ron Janish, and this video is about the stock market crash ahead. Now, you may notice the positive tone in my voice. Well, here's why. I've been through some stock market crashes before. I've been through the crash of '87, which, by the way, I predicted several days in advance in front of a substantial group of people. I've participated in positively and sometimes negatively in the stock market down move, which was kind of like a crash in '09, '08, and all that good stuff. So we're going to talk about what's going on here and maybe some options, alternatives, what to watch for, stuff like that. Okay. Okay. First of all, back in December, I put this chart here in an article. And so at the time the SPY, and that's kind of like a stock that represents the S&P index, right? Was at 142 and change. And that in real terms in the S&P index, that means around 1400. Okay. So here's what happened since then. Let's take a look. Let's take a look. Where are we? Here we go. Here we go. Don't mind me. I like doing this stuff on the fly. Okay, so I wrote this article, and here's the important takeaway in this article. Is okay. This was the chart right here. Okay, it was published on SeekingAlpha.com, and uh, and it simply suggested that there's a set pattern, and it's a reoccurring pattern that I learned from Dr. Alan Hall Andrews, who passed away a few years ago. And this is a pattern that occurs here and there, and Alan learned it from somewhere else, and it's not something that was just invented and computer generated. It's something that you can actually find in a book that's probably over 100 years old. Okay, and so this is a pattern that chartists look for. Okay, and chartists, for those of you that don't know what that means, these are people that are kind of like soothsayers, the shamans of the stock market, if you will. Those with a lot of alphabet soup after their name, like PhD, will call themselves quantitative analysts or something like that. Okay, anyway, this pattern here is the high in the stock market back in 2008. Okay, and this pattern here is the high in the stock market or in the year 2000. And notice that each time prices went down. Yeah, interesting. Okay, now all I was suggesting when I put this up here says, well, if we go up here, and there's a good chance we might have one heck of a down move. Okay, now I'm going to just relax. The world is not coming to an end anytime soon. Okay, so yeah, possibility. Okay, so let's go back to the article. Road ahead. Okay, now what I wrote in this recent article was that it's most likely not going to go straight down. We're not going to have a crazy move like we had in 1987, and that's because in 1987 we had a different setup. This is a certain pattern. That's what I call a setup, and this pattern here is different from the pattern we had in 1987. So what's most likely to occur? Well, this is worst case scenario only. Okay, that the market goes from where it is now down to, let's say about 75 or so. This is basis SPY. Okay, and so this would mean that the S&P index would go down to, let's say 750. And it's at over 1500 right now, close to 1600. Okay, so that's one. This is the worst case scenario. Okay, if that occurs, probability is pretty good that it's going to suddenly jump up, and then everybody's going to be singing happy days are here again, stock market's going to make new highs, yada yada yada, you know the song. And just watch the commentators on CNBC, they'll be singing it big time. And so you have this, and then in theory it would go down. Okay, it would go down to down here somewhere and then up again. That's the standard pattern. Okay, so uh, why could this occur? What logically, besides some kind of chart pattern, which is kind of like astrology, would cause this? Because the chart pattern isn't causing it. Okay, here's why. If you look at most of the G8 countries, those are the real big ones, like Germany and Russia and China and Japan. These countries all have aging populations. A huge section of their population is aging. Like America, baby boomers, right? Well, hey, in Germany and in Japan, they've got that problem on steroids. Okay, so so you have this going on, and if you follow the work of Harry Dent, and the book I recommend is the one he wrote back previous to the year 2000. Okay, that's probably is one of his better ones, and his theory can be found on the web. That's to the extent that I'll take that. More than his theory, I'm not sure anybody really needs. His theory is excellent. Anyway, what what this does is having all these old folks and having very few young folks, it creates a drag on the economy. Okay, and then it's down we go. And then here in this article here I write, is there a stock that's likely to go up soon? And kind of in tongue in cheek, I put in TVIX, and because we happen to have what's called an Andrews, Alan Hall Andrews, that is, ORE signal on this one here, and then another stock where we had an Andrews ORE signal was down here, and that was in something called TZA, and these are basically stocks that make a lot of money on the stock market, either going down or just going bonkers. Okay, so it's not really a good solid investment. Okay, so anyway, and then I write, let the good times roll, and I also mentioned something that's kind of an interesting aside, is that if you notice on here it says 1 for 10, and that means there was something called a reverse split. Okay, and if you notice down here it says 1 for 4. Okay, and that means there was a reverse split around over here. Now what's interesting about reverse splits is they have a tendency to occur in these ETFs right about the same, well, just before, and in this case it looked like it was a couple of days, and the other one it looked like it was quite a while back because it would have occurred over here, just before a significant top or bottom is reached. Okay, they'll either have a split at a top or a reverse split at a bottom. And you look at this and you go, well, that doesn't make sense. That's almost as nonsensical as astrology. Absolutely. But here's the crazy part. In the days of old, those of us that are traders from days of old, remember that there was something, that there was an indicator we joked about, and it was called over top of the chart. And that's because every Monday we receive this big book in the mail called Commodity Perspective, had all these pretty charts in it, and 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 the charts would have tops and bottoms, and sometimes, very rarely, prices would just jump over the top of the chart, and and then the next week there'd be a rescaling of the chart, and this phenomena is kind of like that. It reminds me of that. Okay, so what do we see next? Okay, what we see next, or what I see next, is a bunch of stuff going down. Ooh, this is the market today. Okay, is what I see going on is that the market is not necessarily going down because of North Korea. Strange as that sounds, North Korea is really a sideshow. I'm going to show you why. This is a 5-minute chart, and it includes the time overnight in the S&P. Now, so yesterday the S&P opened. Let's see. Where can I find this? Where can I find it? Here we go. Let's see. Where is it? Where is it? Where is it? 14th. Today's the 15th. I've got a. Well, let's say I got a chart that's smaller than 15 minutes. Okay, well, let's see, where's something in there? Where can I hear? Okay, this was Friday up to here, and there we go, there we go. Okay. Okay, now, this is a half-hour chart. Yesterday, on Sunday, the market opened over here, and it was active, and prices went down. Okay, and then prices looked like they were going to go up, nice and strong. And what happened was, all of a sudden, the numbers about China came out. And the numbers about China reflected the fact that production and the GDP and stuff like that is going down. It is not increasing, and that's a real worry. Okay, and if you look at the other numbers in the United States, you see companies are laying people off. You see Walmart, some representative from Walmart going, "Oh my golly, our sales are way down. Oh no!" And he's more concerned about what the impact that has on the economy rather than just Walmart. Okay, so there's a lot of things going on that indicate that the U.S. is going to have a tough time in the economically in the next year or two. Okay, now, so what do I see going on? Okay, and this is my opinion. There's a lot of opinions. Okay, now this is it. Okay, now what I see going on is that prices are going to do what I wrote about years ago, and that is after they zoom through the median line, this red line here, they come back and then go further in the original direction. Okay, simple as that. That's what I think is going on. So how far down will it go until it comes up and then goes down again? Don't really know at this point, unless I did a whole lot of analysis, and then I might have a good guess. So this is what I see going on. So how far and how long will this down move take? Well, don't really know, because quite frankly, we could have our down, up, down, and maybe here or so, and then the down move is all over, and then up we go again to all-time wonderful times again. Go to new highs in the S&P. This is possible. Okay, that's your wonderfulness scenario. If you're looking for a horrific scenario, let me take a look at the road ahead. Then the horrific scenario is this one here. Okay. Now, what's going to happen is along the way, as the market moves around, and it does a little movement, and this is SPY hourly chart. Okay. As the market does its movement, what'll happen is I'll observe what it's done, and if I have something that I think is worth saying, what I'll do is I'll post it, and in order to get that information, it'll cost you nothing. This is just an opinion, right? And what you do is you go to andrewscourse.com and you click on new. And so you do two things, and you sign up for the free twice monthly newsletter. Okay. And then you also sign up for the free email Yahoo group, and this is the chit chat chatter, and between these two, I'll let you know what's going on and what I see, what my guess is. Okay, so I thank you for your time, and let the good times roll.